Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is home ownership consultant Ross Kay from the wealthyhomeowner.ca, Canada's authority on home ownership. Welcome back to the show, Ross.
And thanks for having me back, Jim.
Ross, a regular listener asked, why is Ross not being interviewed by the mainstream media when his forecasts are so accurate? I checked his CBC forecasts and they were all ridiculously accurate. So why are you only here on House Street? How come, Ross? I mean, I know I'm a friendly guy, but come on.
Well, you got a platform, Jim, that, basically allows us enough time to try to get a message across without compromising our IP. It would be easy just to come out here and say things, and in the process, be giving tidbits of why we're able to do with what we're able to do. But a longer show allows us to communicate what we want to communicate without giving up, our secrets, in one way or another. It's true. I mean, the beautiful thing about CBC is that their archives are pretty reliable. So you can go back in CBC and you can check out what we had to say in the past. That doesn't mean that we're going to accept all the invitations that we get, or that we're not going to be adversarial with reporters who simply regurgitate false narratives issued by organized real estate or some realtor or some would-be housing analyst. What your listener is addressing is the ability to fact check what we say, the same way that your House Street recordings. They're all there, archived. I have no ownership over them. We can't demand that you delete anything. Everything that we say here on this show is recorded and archived and owned by House Street, not us. So I believe probably our most infamous CBC forecast was back in October 17th of 2016. And that was when B20, the first phase of B20, was being enacted. And we were interviewed by Trevor Dunn on CBC News. You can Google Trevor Dunn, CBC News, Ross Kay, and the article is still there. And he interviewed me, and he also interviewed Brad Lamb, the HGTV Condo King star and house-pumping condo pumper from the GTA. While I was selling houses, as a career, Brad went one direction, I went the other. I chose ethics and integrity and telling people the truth and letting them make a decision. Brad Lamb wanted to be an HGTV star and would say anything he could to make a sale. Two totally different philosophies. Well, anyways, in this article, this was B20, and we said that housing prices were going to drop 16%, or I might have said 17% in the article. And I said the price would be immediate, and it would be a record house price decline. Now, there wasn't a follow-up article on this, and there wasn't a follow-up by any of the other press. So, if that report gets missing. But our forecast was 16 or 17% drop. Well, the truth, what happened was, the following spring, that's exactly what happened. In April of 2017, the national average selling price was released as $560,000. By August of that year, 5 months later, the average selling price had dropped to $472,000 for a 16% house price, year-over-year house price decline. 15.5%, 16%, somewhere in there. It declined each month. So May, June, July, and August, the prices continued to decline. This didn't get reported anywhere in Canada, Jim, except here on House Street. Trevor Dunn's article in the CBC recorded my forecast. Now, this may seem to be a prescient call, but it wasn't. Housing markets all function in the exact same way, and they can function no other way, as we've said in your show over and over again. What I'm not going to do is go on mainstream media and give out free information about housing markets that the same information people are paying us to deliver. Why would we do something, give a warning to everyone, which would adversely affect the people who are paying us for the advice by having the market move quicker than what those who are paying us are looking to capitalize on? In other words, that one time in October of 2016, when we reported, we gave a prediction that housing prices were going to drop 16%, 17% at a record rate, never before recorded in history. We did that because our members had already had that advance notice. They had already taken positions where they weren't going to be harmed by it. You were able to track that. The Canadian Real Estate Association released April, May, June, July, August, the average selling prices of the month. Those prices dropped for the first time in history by about 15.5%, 16% over that period of time. At no time ever before had that ever before happened. It didn't happen in 2008, didn't happen in 2009, didn't happen in 1989, 1990, didn't happen in 1995. It never happened before, even on a percentage level, which to us really doesn't matter at all. Brad Land, on the other hand, was telling people things were not going to change. Every housing analyst in Canada was not forecasting a 16% drop. No one. You can go back to every news release released in that period of time, because all of their archives it's all stored on Google. No one forecasted that. Why were we right? And not only right, but virtually 100% right in our forecast. Virtually 100%. Timing by the month level was correct. We're talking a volume of real estate being traded of almost $300 billion annually at that time. How can we only be out that small of a margin in terms of the average price change? It's because all housing markets work exactly the same way. It's why today, as we're talking, on our website, we have the $10,000 prize to anyone in North America who can prove house prices change in 31 days can collect $10,000. Because we know house prices don't change in 31 days. We know they don't change in 60 days. We know they don't change in 90 days. We're actually considering right now, Jim, putting forward a $50,000 reward for someone who can prove house prices change in 60 days. Now, the proof you're going to have to require will be a little bit more extensive than the $10,000 proof. In other words, you're not going to be able to pick 1 month out of the last 40 years. You're going to have to pick 5 months to prove house prices changed. Only 5 months, or in the last 500 months. In other words, only 1% of the month you have to be able to prove it. But if you're to prove that, there's $50,000 sitting there waiting for you. And then we're considering offering a $100,000 reward for anyone who can prove house prices change in 90 days. And your proof is going to have to be a little bit more extensive for that, because we have to exclude 3 specific months as outliers over the last 500. There are 3, since we could find 3 months where you could debate house prices changed in those 3 months, we want you to give us 5, because we know 5 months don't exist. I hope your listeners can understand what I'm saying.
So, Ross, so am I to say you're dangling a $100,000 prize here?
What I'm saying right now is this. We have a $10,000 prize on our website if you can prove house prices anywhere in Canada from 1978 till today changed in 31 days. We know no one can claim that prize because house prices don't change. We are considering bumping that up to a 60-day challenge. We're only doing this, Jim, to draw the attention of the economists at CMHC, the Bank of Canada, and the Canadian Bankers Association, and the OSFI. The only reason we would even waste our time on creating a requirement for a $100,000 prize, because we know you can't collect it. You can't prove 4 times in history, that house prices changed over a 90-day period. You cannot prove it. It is impossible. It has never happened. The world is round. It is not flat. The only reason we would make that offer is so that it would draw the attention of the legislators to question what's going on. We could tell them how house price illusion works, how people have been conned into believing it, bankers themselves, the economists themselves, what's taught at universities around the globe. We could tell them that, but that would immediately lose our IP. We would immediately no longer be the only ones in Canada who in October of 2016 could have forecasted a 16% decrease in selling prices in 2017 and be proven right between April and August of that year. I can't go back in and change what we said in the CBC in October of 2016. I can't change that. That means the public, your listeners, can trust CBC didn't allow me to change that news report. They can then go and check our forecast and see if it's correct. We would also tell them, go ahead, go check our reports in CBC in 2013 as it relates to the Calgary housing market. We tell your listeners, go back and check our reports in the Huffington Post in 2010 when we called out the Canadian Real Estate Association for multiple counting single sales, because that's recorded. We don't own that content. I can't change it. Howe Street owns these recordings. I can't change them. My firm can't tell you to remove it. It's there in perpetuity. You get to challenge what our forecast and accuracy is. The CBC article proves who you should listen to about housing analysis. We forecasted a 16 or 17%, again, I can't remember what the article said, decline. There was a 15 to 16% decline subsequently recorded within the next 10 months. It peaked in April and it fell in August. We know why it peaked in April. We know why it had fallen by August. We know why. We're not going to tell you why we know. What we're going to do is say, go back and check the Trevor Dunn report in October of 2016 with Ross Kay, and you'll see the report. Then you can go to the Canadian Real Estate Association, and you can check all of their selling prices for each of those months. And you will see the decline went from about 94%, 90%, 95%, 93%, or 85%, 83%, 84%, something like that. You can go check and see it. You can do the math yourself. You can call us out. The value of an analyst, the value of someone who's providing forecasts, is the ability of the public to go back in and check if what they're saying is true. Howe Street prevents me from erasing analysis that is subsequently proven to be incorrect.
Now, Ross, one of the reasons I suspect you're not on mainstream media a lot is that you counter the messages from all the real estate companies who are heavy advertisers on the evening news you see on television. And I look at how uncritical the evening news is of people like BC Hydro, who again seems to be about every third ad. Do you think there's a correlation between how much ad revenue they get from certain industries and how honest their reporting is on those industries?
What I can tell you is this. In the past, it no longer applies because real estate has moved digital. So, in all fairness, to sell a home today, you only need to be on Realtor.ca. You don't need to have ads in the newspaper, the real estate book, Homes Now, the post media, any of your local post media branches. You don't need to advertise your house on YouTube. You don't need to do any of that. The only thing today in 2020 you have to do is have your house on Realtor.ca. So there is no longer a relationship between local real estate agents in their local newspaper, okay? 10 years ago, certainly the 30 years or the 25 years that I was selling homes, the newspaper relied on real estate ads to survive. It literally relied on the ads. I think I've said in the show, we spent over $500,000 in our local Burlington Post advertising homes during my career, okay? Like, it's a staggering amount of money. Just we pay. There were times in my local town of 60, it grew from 50 to 65,000 homes, where there were 40 pages of colored real estate ads at $1,500 a page being run. That supported the entire news staff, because this was every single week. So I think, Jim, it's the culture that was built up where the news believed whatever message organized real estate gave them because they were feeding them. And that's basically what you're saying. Yes, anyone who takes ad dollars from anyone else is going to allow a message to be skewed. That's what I believe, and I think your reference to BC Hydro is exactly correct.
We'll have more from Ross Kay right after this.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlin, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Cypress Development Corp. is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp. trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Welcome back. We're speaking with Ross Kay. Ross, immigration levels have dropped big time this year as a result of the virus lockdown. Some analysts are citing this as a decrease in demand, which could lower prices. What's your analysis of the situation?
My analysis is this. Immigration has never caused house prices to change because, as we said in the previous segment, house prices don't change in 31 days. They have never changed in any 31-day month or calendar month. Never. So if they've never changed in 1 month, obviously it's impossible for them to change in 12. House price illusion, on the other hand, is very easily created and very easily believed by the public and subsequently gets recorded as a house price gain. So what I can do is explain how house price illusion works and how the illusion of house prices increase, but I can't give you any data that would prove house prices change in 31 days. Immigration levels are the exact same thing because they use it as a supply and demand comparison. So I am not saying that wealthy Hong Kong buyers purchased, or Chinese buyers, from communist Chinese buyers purchased Canadian homes. I'm not saying that. They did. What I'm also saying is that their impact in the market was not great. Their impact was on house price illusion. Generally, immigrants to Canada follow the same path over and over again. So when we exclude those ultra-luxury class buyers, and we just look at the regular immigrants that come to Canada, the regular families, even those with money, okay? Even those that come here with, say, $100,000, $300,000. They don't buy real estate when they move here. They find a rental. They move in with other family members. They have arrangements already made, but it's not generally to own a home. Then, over a period of time, they decide which community they want to live in. If there's a community where they culturally feel happy, they may purchase a home sooner than if it takes them a while to find a community where they feel welcome. This is what's happened for the 40 years of data our housing market analysis covers. It has never changed. CMHC itself did studies and surveys back in the 80s that showed the progression of new immigrants into the home ownership stock. Somehow, those old reports, which we have. And let me stress, Jim, we have CMHC's copies of those reports. But CMHC staff doesn't know that they were done by someone else, a decade or 2 decades ago. Why are we the only ones that know that? Because our area of expertise is housing markets. We have to know how immigration levels will impact house prices or the housing market 4 to 5 years from now. We're not worried about how it's going to impact it this year or next year. It's long range what we're worried about. Right now, we're worried about the immigration level that came in the previous 5 to 7 years, because those people increasingly will be looking to buy homes, which is just the opposite of what you're hearing from analysts today. You're hearing there's going to be a decreased demand because immigration levels are dropping. We say there is a push from previous immigration levels in Canada that will be going to be putting pressure into the resale housing market. One of the reasons you have to buffer your forecasts and you have to understand house price declines will not be recorded exactly as they would if those previous immigrants who are now Canadians are looking to buy, your forecasting is going to be wrong. The reason why our 16% forecast was proven correct, as mentioned in the last segment, back in 2016, was because we're measuring these things. Luckily, in terms of immigration, we don't have to worry about regional or municipal level change. When we're talking immigration, we can look at it at a provincial level, how it's going to impact, and then the subsequent impact on the regional markets, depending on how they're interacting at that time, and where price gains are changing, where the new housing stock is being added, what kind of new housing stock is being added, if transit patterns are changing. These are the things that matter. It's why we know that declining immigration levels right now in 2020 will not impact the housing market. You're not going to see a negative impact in demand because of low immigration levels in 2020. It's the high immigration levels from 2013 till 2019 that you've got to be worried about if you're a home buyer. You've got to understand how many of those people have already purchased, how big the wave of those people is coming into the housing market, how the housing stock is structured at the present time, and whether it can accommodate them or not, the patterns those immigrants normally move in, and where they're going to be moving. What we will say, which is going to have a huge impact in the housing market, is next fall's a student rental market, because you have a whole bunch of inventory that is going to come onto the market as investors look to cash out. We are assuming right now that universities will not return to physical attendance in the fall of 2020. That means the rental housing stock, normally filled to capacity with students, is empty. Because it's not only the international students we're talking about, it's the Canadian students that fill up these residencies, these rentals. They're all going to be vacant. You need a real high quality investor who's protected themselves to weather this storm and can find ways of renting out to locals if they want to maintain their real estate investing stock. That's where you're going to see a lesser demand. Now, that lesser demand means that real rents, not what you're hearing from PadMap or in all these Zoocast and all these other folks looking to grab some headlines so they can run some ads, so people will pay them to run ads in their website. As these rentals become available to families, it lowers the overall pressure on the rental market. And this is really, if I was a university, what I would be fearing. Because I can only imagine what voters in British Columbia, Vancouver, are going to do when they find out how high local rents were because of UBC's continual increase in student enrollment without an equal inflation of their own student rental housing. Because your universities only house a small percentage of your university students. After first year, they head off campus. That is all filling communities across Canada. All major municipalities with the university are impacted by this. You are going to see the first time the very first time in history where students don't return for the fall semester. That means all of those units are vacant. Don't worry about immigration levels. That wave is still going to move forward. That demand factor will not change for another 2 to 3 years. What we're looking at now is the rental demand factor, which filters its way down into the overall rental market, which filters its way back into the residential home ownership market, which filters its way throughout the whole Canadian economy. That is a reality that should be talked about. Not that immigration levels dropping in 2020 are going to be a shock to demand of real estate. The only shock to demand are local Canadian families who decide not to trade homes in 2020 and 2021. The only shock to demand is when people realize that they could be losing tens or hundreds of thousands of dollars by acting today instead of waiting until tomorrow.
We'll have more with Ross Kay right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Ross Kay. Ross, we were notified today that a huge surge in new listings has hit Calgary, with over 8,000 hitting Realtor.ca in the last 48 hours. What do you take from this giant surge?
8,000, Jim?
8,000.
8,000 new listings in Calgary. Okay, let me check here, click here. So I know what this listener has done, and I know the scam, how it works. Okay. So right now on Realtor.ca. So this is the listeners who question about how real estate stats are a con job. This is a prime example. If you go to Realtor.ca today and you type in Calgary into your search, and then you go to your filters and you change the filter to let's go back to the 14th. Back to the 14th. So the last 3 days. Okay, I can pull that data up here too. Okay, the last 3 days. Okay? It's going to show that 5,864 new listings are recorded in Calgary. So what they're saying is 5,864 listings have been listed in Calgary since June the 14th. The truth of the matter is there's 222 new listings in Calgary. There are only 222 new listings in Calgary taken since June the 14th. What your listener has uncovered is how Realtor.ca is designed, and how all the protocols in the data distribution facility, that's what it's called, DDF, which is how all of the listings from across Canada in local real estate boards are aggregated and then sent over to the internet to Realtor.ca, is designed. It's designed specifically so the public never knows what's really going on. It's so the public has to question whether they're going insane or not. The public has to question, what do you mean? I just typed in June the 14th in the city of Calgary on Realtor.ca, and it's showing me 5,864 new listings. What the Real Estate Board of Calgary has done is what's called a flush and refresh. Okay? So one of the functions of Realtor.ca is the ability of a real estate board to do a flush and refresh. What a flush and refresh does is it establishes all the existing inventory as only being effective on a brand new day. So if you remove that filter for Calgary, so I'm going to do it live here as I'm talking to you, Jim. I'm going to go from 5,864 listings to a grand total of 6,410. In other words, there's only a difference of 600 listings. What the Calgary Real Estate Board wants the home buyers to believe is every new listing they're looking at is a new listing, when in fact, it's not. It's not just that there were 600 listings that were active before June the 14th. It's actually there were 6,200 listings that were all active before June the 14th. People say to us, Ross, sales to new listings ratio. This listener has just given us a gold mine, Jim, because here is a prime example of why sales to new listings is a scam. It's a con. It's something that I couldn't even suggest to be true for the 25 years I was selling real estate. Because if I ever said that to a client, and that client took me before the regulator for real estate in the province of Ontario, I would have lost my real estate license. It's a fraudulent number. It's a marketing tool created by organized real estate. And here is an example. Because right now, in Calgary, in June, let's go back to the month of June as I'm talking to you here, Jim. Let me just check and see how many of those listings are available for June. Okay, that's amazing. Almost identical number to the number that were entered after the 14th of June. There's 5,884 listings showing as coming up in the month of June. Obviously, the Calgary Real Estate Board will not report the sales to new listings ratio for the Calgary Real Estate Board. Go to their website and see if you can find sales to new listings ratio in the as a published stat on their daily stat. Guess what? Doesn't exist. Every single real estate board across Canada, this is what I hope your listeners take from that question. Every single real estate board across Canada reports their stats differently. Some report the same stats as other boards. Other boards report stats that some other boards don't produce. All of those stats from any one individual real estate board cannot be cross-populated in a metric without making an adjustment to it, because the definition of what they're recording on one real estate board to another are totally different. And this listener has just debunked it. You have on Realtor.ca right now, and unless there's a way I don't know if there's a way for the CREB to go back in and change that with the next update of data going to the DDF, which will be around 5 o'clock Eastern time today. I don't believe they can go back and do it. So all of your listeners should be able to go to Realtor.ca tonight, type a search for Calgary, and then pull up in the filter section houses listed since the 14th of June and hit search, and it's going to show you, oh, there you go, 5,884 listings have been listed since June the 14th. The exact same number that have been listed since June the 1st. They did a flush and refresh of the inventory in Calgary. Now, every single real estate board across Canada has their own methodology of entering data and stats. The reason why you have such a wide variety across every real estate board in Canada is to keep everyone in the cold, to keep you all believing that you can't time a housing market, to keep you all believing house prices change in 31 days, to keep you all believing that you can list with any real estate agent in Canada, and it's the same as listing with the best real estate agent in Canada, to keep you from believing that the median realtor does not sell one house in a year, to keep you from believing that real estate is not a great career to get into when fewer than 10% of all the realtors make as much money as they would make working minimum wage at McDonald's. They have a false narrative that has been consumed by, like you said, Jim, the media. You have right now, this listener has found a flush and refresh which allows everyone that hears this show to tonight go on Realtor.ca and see that in Calgary, 5,000 884, as of this moment in time, 5:54 p.m. Eastern Time, were listed after June the 14th, meaning there were fewer than 600 homes listed before June the 14th. You've been scammed, folks. The Calgary Real Estate Board has been caught repeatedly, time and time again. The Real Estate Board of Greater Vancouver caught time and time again. The Toronto Real Estate Board caught over time and again. The bigger the real estate board, the more manipulation of the staff that takes place, because the membership loses control of the board. The reason why the Realtors Association of Hamilton Burlington has been one of the most reliable real estate boards in Canada for not skewing the truth, in other words, they just give you the data, is because the membership in that board wouldn't let the staff at the board do anything that could throw the shade on those members. These other real estate boards, which have thousands of members, can't do that. The staff controls it. And over time, decades, the staff has taken total command. The Canadian Real Estate Association, which we would deem to be a fraudulent view of the housing market this month, had Sean Cathcart, the young fellow who's replaced Old Man Clump, as their senior economist. Now, young Cathcart has no idea what a housing market stat is. He has no idea how the MLS system was built. He has no idea about the rules and regulations that govern every individual real estate. He believes whatever Greg Clump told him when he took the job. Greg Clump was fooled for decades. So, anyone who's questioned this in the past on this show, you can go right this evening to realtor.ca and you can click in Calgary and in the filters, you can have houses listed since June the 14th. It's showing you a staggering 884 houses have been listed. I think if that was the truth, that would be the biggest news in real estate history. Of course, it's not. It's no more than a flush and refresh. Just another way of manipulating the public for the advantage of home sellers. Because the entire MLS infrastructure across Canada is designed with one purpose and one purpose in mind: to get sellers the highest price possible in the least amount of time. It is not designed, even in the most minute area, to get buyers the lowest price possible, no matter how long it takes. That's why the wealthy homeowner exists.
Ross, thank you so much for chatting with us.
Thanks for having me on, Jim.
My guest has been home ownership consultant Ross Kay from thewealthyhomeowner.ca. If you have any questions for Ross or any of our other guests, you can send them to info@housestreet.com. Find us on Twitter @HouseStreet, our YouTube channel, Talk Digital Network. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HouseStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HouseStreet.com radio is a production of House Street Media Incorporated.